So we were talking about this dollar potentially tailing off to the downside with a 50% mean reversion target at 101.70. All depends on how the market decides to react to the non-farm payrolls and how the dust settles. But we're up at this resistance level on the daily chart. We've come up into this. It's actually it's a gap between that candle with the displacement. So in my education series on the Discord under education, we talk about displacements and these voids, why they happen, and why the market likes to come into those, react either as resistance or they fill the gap and then it becomes resistance, or we can just plow through. Um, but it's the reaction that we're looking for. So currently, it's serving as a resistance area. So in that regard, we'll turn it red to remind ourselves that it is acting as resistance. And I was touching on that yesterday. I put out a market watch list video in Asia. Um, and it's here, and I'll put it in the chat. Um, if anyone wants to go through that as well. But it's there in the Discord. It was put in the Discord last night. Um, and it was talking about some of the setups, and we'll just plow through them quickly. So if we continue to see this dollar sell off, then let me just have a look at the bonds and the yields. So we've got strong yields versus a relatively weak dollar. This 10-year yield is the highest since November. Okay, so it's capping at 420 at the moment. This is due to the US Treasury boosting its estimate for the third quarter issuance to 1 trillion versus 7 billion seen back in May, and also the Fitch downgraded the US economy to AA plus. Additionally, you've got the Bank of Japan tweaking its yield curve control, and US data remains strong. So that's essentially the perfect storm for higher US yields. But nevertheless, the US dollar is tailing off. So that's a strange combination, isn't it? So I'd say then this is all very technical. Now we had US services on the soft side. So this could be more technical than anything else. Let's see if the non-farm payrolls comes in as a blockbuster, then that dollar is going to completely wipe out any of the setups that I'm looking for. Okay. So let's move on to the currencies. Let me know if there's any in particular you want me to look at, but we want to breeze through these. So the euro dollar on the daily chart here, you can see that we've had this impulse, this correction, and this continuation to the downside, and that continuation seems to be stalling, and there are prospects of a move up. there are prospects now of the correction. We've already started to see that correction and a continuation of that correction. That's on the daily chart. Okay, so we've had impulse, correction, impulse to the downside, the correction, another impulse to the downside into a potential supporting area. Okay, into a supporting area, so therefore we have prospects of this correction continuing. Now, if we measure the correction, there are prospects all the way up to the 78.6, right? But in this steep downtrend, then potentially that's less likely, and we can start to look for maybe a 50% mean reversion to 109.80. Right, we haven't yet come up to the 38.2, and the high of the day so far, 109.61. So we've come in close, but no cigar, right? If we pull out to the 1 hour chart, and I'll just go through the weekly template, we have a price in the euro that's come out of an inside day. This is the opening range, Monday and Tuesday. It's moved up into that opening range. Okay, so shorts, and then you've got longs coming in. Okay, that was one push outside of the opening range. And then we had another push outside of the opening range. We had a break of structure on the correction coming up. Okay? And we had this came out of a third push below last week's low. So what that is telling me is that the market has trapped traders low in 3 pushes down, the power of 3. We've broken out of the bearish trend. Okay, we broke structure, which was over here, albeit only with wicks, but on a lower time frame. If you look at that on the 15-minute chart, you could argue, well, that structure was actually broken over here with these candle closes, albeit tentatively, right? So it's not a significant break of structure, but it's something to score up nonetheless. Now, in breaking that move down there, I'll come up to a 1 hour, it's easier to see. Breaking the swing structure here, it caused a first green day, so a positive day for green, that green arrow, a first green day out of a series of red days, bearish closes. So that first green day, as we saw on the daily chart, in my case the candles are purple for green, but so that first purple day out of a series of blue, okay, an up day, that is our signal day to be looking for a continuation of the move up. And what I'm looking for is an opportunity to buy low within all of this congestion, right? So I've got my marker on that down candles range there. So within that down candles range where the rally came out of, the origin of that break of structure came from this candle's range. So I've marked this candle's range with a gain box. It's called a gain box. It's down here. You can find it on trading GAN box. Sorry, you can find it on TradingView and change the settings and so on. But what it does for me is basically I measure the range, and I've split it into thirds, 3 levels, and I like to get involved in a pullback as deep as I can. So in the third level, the top of the third level, with a stop below the lows. Now, in being so aggressive, that does leave you at risk of the market coming into that range, which it's doing now, and it not coming all the way to my fill and the market running away without me. Yes, I'm talking right now. Yes, can you not hear me? Can you not? Guys, is there anyone in the room that can hear me? We've got, yeah, okay. How to change this background? What background? Background music. Ah, that's on your end. Uh, that's my end. Terrible music. Sounds like a bad alarm. Um, there's a. Let me do a screenshot for Engram. Sorry, guys. Give me a second. Screenshot. So, screenshot. Job done. It's marking it off, and then we'll carry on. Okay, so turn off your music. There. Okay. Right, there you go. Ravazo, yes, I've put a video in the Discord in the education section um, on my setups. I've also got it there on my YouTube channel, part one and part two. All right, so if you go to my YouTube channel, you'll see that there. I can put it in the chat as well just to make life easy for you. There you go. I'll put part one on, and then you can go to the YouTube channel for part two, or look in the Discord channel, where you'll find it there as well under the education. Oh yes, you need to move over to TradingView, my friend. Absolutely. Um, MT5 good for trading, and then you can do your analysis from TradingView. It's fabulous. Right, let's move on, guys. So yes, so the risk is that I can miss out if the market shoots up, and if that were the case, then I'd act accordingly. I'm not going to chase moves, but I might start thinking about moving up my entry point, depending on structure and so on. At that point, maybe even my stop loss as well, if I've got enough protection as per structure as the market starts to move in the direction of my thesis. But generally speaking, I want to buy as low as I can. Now, I'm not going to do anything ahead of non-farm payrolls. Speaking of which, we need to get a move on because that's coming up soon. So, everyone okay with euro dollar? They understand where I've got a bullish bias on that. Same scenario with gold. Gold, we had a first green day yesterday, and it's the first day of a new 3-day cycle because it failed at the week's low and closed higher than the prior day's close, and therefore we are looking for an opportunity to get long. It's moved into my area to buy, but it's just a shame that we got non-farm payrolls because I don't want to be involved in the market, as tempting as it is, ahead of the number. It's just one of my rules. So it's done what I thought it would do. It's come into the lows. It would have triggered me in, and that could be a really nice, explosive, easy money trade. But we're on non-farm payrolls days. So this is exactly the same setup as euro dollar. We can fly through those. Sorry, I was lost where you put your take profit for euro dollar. So I was talking about the euro dollar. What it can do, it can come all the way up into the 78.6, so 110.20 ish. One way to look at this is to go to the daily chart and just clean it up. No, we won't. We'll have to stay on that because I've got an indicator template set up. The ATR. So the ATR, the average range on any given day over the last 14 days has been around about 110, 111 pips. So if we measure today's range so far, there's a lot of possibility for this market. If it's going to run higher, so that's the low of the day so far. So if we measure 100 pips, where does it take us to? So if this were to rally, this can take us all the way up towards 110. Well, just sticking to the, into the 110.30s, based on the average movement on any given day over the last 14 days. Well, in fact, that might even be last 20 days. But that's neither here nor there. Okay, so that is the ATR. So it could move all the way up. Look, and also we've got all of that money that's short. So between here and there, all of these shorts are in the money. What that means essentially is that those that have been selling have probably been moving their stop loss lower and lower and lower. Okay, and they're starting to bail ahead of the non-farm payrolls, so they're taking profits. And if we were to trigger those that have started to short with their stops here, they're going to be buy stops. So if we trigger a breakout above this area, those buy stops will be pushing the price higher. Then you'll have new money that's come in because of the non-farm payrolls data, presumably. And that's going to lead to a potentially strong move up. Okay, so that's what I'm targeting is high up. And you've got stops above here to target as well. And if we get through there, then great. This can go all the way. If we get through those stops and potential resistance, and then you're talking about, if you pull this back, you're talking about last week's highs, because there's not a lot of resistance between here and there. That is a fast move down. It could be an equally fast move up. But in that respect, you'd be sensible to. Well, I would suggest. What I would do is take money off as we're going up. I might add to the position as my thesis is confirmed, but be looking to scale out at areas of potential resistance. If I don't see that market with real momentum, then I'll be looking to take profits, and so forth. Sorry, okay, so that's the euro. I hope you're clear on that. Aussie long, dollar yen long, dollar CAD short. Okay, Dabs, good luck with your positions. Looking at the NASDAQ, same scenario. We've had a gap up here that was made, so that's my target. I like the market. I like it when, I see the gaps getting closed often. We've got this trend line resistance that has now turned into a counter trend line. Okay, we've got the break of structure, the prospects of a pullback. This was all stuff that I drew up last night. So far, it's all looking pretty good for a move back into the origin of that break of structure. So these candles here, these blue candles, again, I've drawn that GAN box with my entry way low, stop below the lows for a move up into the gap. We've had one drive, two drive, three drives that took the price below last week's low. Okay, so we've consolidated down low, we've got a head and shoulders, breaking structure, coming back in potentially to move up. Okay. So if we move to the S&P, same scenario, gap target up here, 3 pushes into the low of the week, 4 pushes in fact really. Now we've broken that resistance, so that is now a counter trend line support. We're coming down into yesterday's closing price and into the GAN box. Okay, so potential to be buying low to move up. We're in the third day of that's not what it looks like it means. It's Wednesday, Thursday, Friday. So Wednesday, Thursday, Friday I treat as a new opening range. Wednesday is the opening range for the latter part of the week. This is a 3-day cycle setup. So you've got shorts in the market, and on day 3 I'm expecting an explosive move out of resistance to move on up. Okay, any questions? Let me know. Dollar yen. Dollar yen, we've been talking about this all week, and it closed as a first red day yesterday. So we had a series of bullish closes. We've started to consolidate up top of the range. We've broken out of that bullish range. We broke structure over here. That was structured there. That was the highest low ahead of the highest high. We broke that over here. So that's paving the way for a sell-off. But then bulls move back in. Okay, we've created a peak formation up high in that range. We're yet to come back into that. What I like to see is a move back in and then the sell-off. So we've had that first red day coming lower. Okay, and now what I'm in anticipation of a move up to come down. Right, so we've got a peak formation up high, we've got a peak formation down low, but the bias for me is lower, considering the prospects of the US dollar continuing to sell off. Right, so with the US dollar, you can see here we've got structure over here that's broken. Okay, that is broken structure. It's turned back into potential support. It is broken structure. We've got the market moving back up into the highs. We've got first red day, so prospects are for a move lower in the dollar, and that will transpire into everything that we looked at here in a very positive light and put us on track to making a lot of money. Dollar Swiss. Dollar Swiss is one of my least favorite pairs at the moment. It's giving mixed signals, but we'll just go with the flow, and we're moving up into the peak formation up top. So we've got trap volume, we're moving back up. Now, those that are holding on to their positions long, okay, are going to be desperate to sell out of those positions. So that could entice selling with the price moving up into those positions that are long. So they've got their sell stops and that could be the fuel for a continuation to the downside into easy money down here, low hanging fruit below these lows, low hanging fruit target area. Okay, so you've got this target area for the price to move into, depending on the data today, and then below, all the way to last week's and last month's lows. Okay, right, we can move over to Aussie yen. Someone asking, I don't have it on my watch list, but by all means we can go and look at it. Okay, Aussie yen, AUD, Right then, Aussie yen. Let's start from scratch. Haven't got any markings on here yet. Right, so we are from a daily perspective. Trying to come lower. Broke. Haven't really broken any structure yet. Major structure is here and here. Swing structure down there. You've got support in here. No, you can look at the analysis for gold. I did analysis last night on gold. Over here. So if you want to go and have a look in Grim at analysis on gold, you'll find it in there. We've got resistance up here. Right, this is the daily chart, right? So just mapping out what we're at, where we're at. Okay. Now let's have a look at the internal ongoings of this market. So starting this week here, so we're on day one of the 3 days, day two of the 3 day cycle. This is day one over here. Day one. This is the second day of that 3 day cycle. So far it's an inside day. I'll explain the significance of what all this means in a moment. The opening range, we got 1, 2, 3 pushes. We've got a bullish counter trend line. We've got a break of internal structure here. Over here. Um, so that's also bullish. So for me, this is looking bullish. I want to be buying low within the range. So that sort of scenario. Turn these colours down a bit. See what's going on. Okay, so that's Aussie yen. So this is day one of a 3-day cycle. Day two tends to be a trending day. We're on the backside of that bearish trend, and we've got support down in here. So that would be my thesis at the moment. Nevertheless, we are, got to keep in mind that we are on the backside of that trend, daily trend. We're trying to break lower, okay? But it could be a move up into the trend to come lower. So in that regard, just bear in mind, and also you've got a fair value gap, uh, price and balance in the daily chart between here and here. That could lure the price up into it, potentially acting as resistance. And if you pull a Fibonacci on this as well, oops, not that one. Fibonacci, there we go. We're targeting a 61.8 retracement at the extreme of the move up into that resistance area between these two candles. Okay, so that is AUD JPY. Okay, day two could be a day two runner to the upside. Can everyone see my screen? We've got Bruster saying he can't see anything. Can everyone see the screen? Okay. Bruster, it might be in your settings. If you go to the bottom left of your Discord with your profile there, you've got a microphone, a headphone, and a settings wheel. If you click in settings, you might be able to do something with that there. Or if this is a new thing and you were able to see it before, then I really don't know. We've had quite a few technical issues this week with Discord and on both sides. So I'm unable to advise really on why you won't be able to see the screen. Other people can. I'm going to have to move on because we're coming up quarter to 6 in the morning for me here. and that's heading towards non-farm payrolls hour. So that's Aussie yen. So we'll mark that up as well as a candidate for today. Such lovely setups, and a shame that we've got this red news on the calendar that could just blow it all up, really. But we'll have to see. I'm being asked about Bitcoin. Bitcoin, I'm guessing, is still. Let's look. So I've been looking for. Okay, I think I did this on a weekly chart. So we've got this bearish correction. No reason why. So you've got this pattern. You've got this impulse correction, impulse correction, impulse correction. So I'm presuming that this is just going to continue. We're coming into support. We've done a 38.2 already. There are prospects of a move down into 50% mean reversion, but this area here, for me, is going to be support. So maybe an opportunity to be buying with prospects of a move up. Okay, we're on the backside of that bearish trend, so that is a bearish and a bullish counter trend line, and you've got this bullish trend line in place here, coming up into that as well. So there is a confluence between horizontal support over here and dynamic support at a 50% mean reversion area, which gives me conviction that the price will bottom out here and then continue higher. If that's not the case, then you're looking at a move all the way back into test these lows, and if that breaks that area there, and I'm highlighting, that's going to be a very key area. If that breaks, then you're looking at prospects of a move much lower. Okay, let's look at sterling yen. Seems to be on the weekly chart a firm correction here on that last week's candle. Two-way price action, difficult to call. I'd be in anticipation of that wick being filled this week, but last day of the week, it's hardly looking like it wants to. You'd expect it to be much further down if it was going to. Okay, so get onto the daily chart. Have we broken any significant support? Yes, we have. This was the swing low, and we broke that here. We've come right back up into the highs. Will this counter trend line do its job and act as resistance? It's trying to. Now we've broken support to some extent. If that wasn't such a strong drive up, I'd be tempted to say that we're rolling over to come lower. Hard to say. Hard to call. Hard to call. Okay, let's look at this on a weekly template. Guys, if you've got any questions, we're going to be wrapping up shortly. So fire away and we'll go over and get prepared for non-farm payrolls. There's got a message over here from the boss, I think. Everyone's seeing my screen. I've been told that they can't see my screen, but FX Boss Lady said that she can see my screen. So I'm going to clear all of, well, let's clean up the fibs and get a better view of what's going on. So we started out the week up high. We started the week off up high above last week's highs, and we've come out of there, which makes sense because that is the trendline resistance. So Monday, Tuesday day 1, day 2, day 3, move up into shorts. Day 1, day 2. Day 2 could be a continuation to the downside. So I think my thesis is weighing bearish here, which would make sense if the dollar yen collapses. So yesterday's closing price acting as support currently. If that goes, then I think we're good to say that this is heading down back into that breakout area, which was the daily support. It was broken structure at 179.90. So I think we can have a fast move into that. And in fact, we can probably come all the way down into, at least into here. 178.50 target, guys, on sterling yen. So noting we've got resistance here at structural level. So that is looking to be a day 2 runner. 3-day cycle back into all of this length. So we've got the highs. Where are the highs, guys? Up here. That would make that low there was the structure, which is bang on last week's highs. So, yeah, bearish, uberly bearish on sterling yen. Front side, bear trend, continuation. Okay. Any other pairs, guys, you want me to look at? Cable, same scenario really as euro dollar, looking to buy low. It's coming to that target area that I was talking about. I drew this before it happened. It's worked out to the hit almost so far. So breaking out of structure to the upside. Almost, yeah, we got it close. So that's broken structure. Follow me on that, guys. So that was the well, actually, the structure that we really need to break is this one here. This is internal structure, but it's good enough for now. yesterday's highs. So we broke those in Asia, just ahead of the US. We've come down and looking to buy low is what I've said. I'd want to be buying lower to be fair, but I've got a fair value gap between here and there. We've got this order block down there. I'd rather be looking for a move up from down there, guys. So looking to buy low, yeah, okay. So it's not what I want. Stop loan structure's fine. Lows are quite some way off. So this was the first green day, but it wasn't the first green day. It closed lower. It's looking like it was going to be a first green day, but it didn't quite. It was to the pip. Depends on your broker. I bet with another broker that would be a bullish close. So that's cable. Setup really the same as euro dollar. Looking for a correction up. Right, so we had the breakout of the range, Monday and Tuesday opening balance, broke out again. So we've had 3 drives this week into these lows. 1, 2, 3. Low of the week, low of the month, peak formation low, bulls coming in, breaking trend line resistance, now regarded as counter trend line support. Okay, we're starting to build on that counter trend line support. I think we can have a pop lower to come up. Any other pairs you guys want me to look at? Okay, 2. All right, so as you can see, guys, I'm categorizing my setups to give me a quick snapshot when I look at these pairs at what I should be doing, my bias, drawing everything as I want to see it happen. And if it's outside of what I want to see, then I'm not going to do anything about it, depending on what sets up. But if it's out of miles out of range of what I'm anticipating or what I want to see happen, then I'm probably going to be wrong. And you don't want to be trading when you're wrong. You know, it needs to look right. Okay, so we'll wrap it up there, guys. It's been an hour. Unless anyone's got any last minute questions. 5, 4, 3, 2, 1. Okay, guys, good luck out there today. Last day of the week. Try and go out of the week with a positive result, so you're not tilted for the weekend. Try not to chase these moves around non-farm payrolls. Sit back, let it work itself out. Let it show you what it intends to do. I like to wait at least 5-10 minutes, preferably 15 minutes on the 15 candle rotation after the data has come out. That gives it enough time to do all the whipsawing that it wants to do, pulling people left, right, and center, causing a lot of pain before it actually proceeds to go in the direction that is intended. And as we've looked at today, the bias for me is a bearish dollar. It's breaking structure, and I'm looking for confirmation of a break of this trend line, and that will set us up really well for what we've been looking at, which is all really US dollar negative. Okay, so I might be completely wrong, and so be it. There'll be more trading days and setups next week, but it's all looking pretty healthy so far for um, a negative dollar day and positive everywhere else. Is that Aussie coming back? I just want to check that out. Lovely, frozen screen. Okay, we'll leave it there. Good luck out there, guys. Thanks for joining. And I'm speaking to Wayne today, so I'm going to put that event out live in a moment, and we'll see you there as well if you're going to be around.